Great stuff. Okay, I'll make that just a couple of minutes past now, so we'll get started. Hello, everyone. My name's Stephanie. I'm from Groundwork, and I'm here to be the host today of our webinar on greenhouse gas emissions and reporting. So just quickly, let's hopefully can navigate this slide deck. Just a little bit of a welcome from myself. Just for housekeeping purposes, we are recording today's session, so if you would like to remain anonymous or not be part of the recording, then please can you just either switch your camera off or change your name. Hopefully everyone's familiar with all of the Zoom protocols after the last couple of years we've had. So I'll only be with you for a couple of minutes just doing this introduction to Groundwork. I'll soon be handing over to Amy Coulter, one of our senior consultants here. Amy has a wealth of experience in embedding sustainability within organisations through the development of sustainability strategies and reports. So you're in good hands today. In terms of the process, after the kind of format for today, after I've introduced you to a little bit about Groundwork, we're running through the main basics of greenhouse gases and the reporting. We'll then look into a bit of detail of understanding numbers and finally finishing up with scope 3 emissions. At the end, we'll obviously explain some ways that we might be able to help, and the second half, so we hope that that whole section will be done within half an hour. So the predominant kind of focus for today is a Q&A, so providing you with the opportunity to ask our consultants. So alongside Amy is also one of my colleagues' reps. Both of them will be on hand to answer your questions. So please think about those as we go, and you might hopefully have some things prepared as well. You can feel free to pop them into the chat as throughout the presentation if they come up, but we will wait until the end until we actually answer those. So hopefully that's all okay. So just a little bit about Groundwork. So firstly, some of you may know who we are, some of you may not. So for those that don't know, we are a federation of charities across the UK that mobilise practical community action on poverty and the environment. As a charity, we're really passionate about creating a future where every neighbourhood is vibrant and green, every community is strong and able to shape its own destiny, and no one is held back by their background or circumstances. So there's a few pictures there about from some of our charitable programmes, and I hope you'll agree that it's some fantastic work that we do as a charity. But how does this link into sustainable business? We've been operating our sustainable business services for over 20 years as part of the charity. Obviously, as an important part of the community, businesses are willing and more so wanting to help not only community projects but also improve their environmental performance. So in terms of what our consultants do, such as Amy Rex and a team of others across the country, is that they offer impartial, tailored sustainability advice, help organisations build a greener future. We work closely with businesses from all sectors to meet sustainability goals in a way which is both impactful and achievable. And as a charity, we invest every penny back into local communities. So if you choose to work with us, you're helping to build a stronger, greener future for everybody as well as yourself. So I will now pass you over to Amy, who's going to start the core of today's presentation.
Brilliant. Thanks very much, Steph. So I did. There we go. Sorry, everyone was muted, including me. I was just saying, I've seen that I know a few of you here today on the call, but just to reiterate what Steph was saying, my name's Amy and I'm a sustainability consultant at Groundwork. So we work with all different sizes of businesses from different sectors, and I focus predominantly on carbon management, carbon reporting, and decarbonisation. So what's driving greenhouse gas reporting? As a reminder, we're talking here about the greenhouse gases which we generate from burning fossil fuels predominantly, which support the delivery of our goods and services. And as you'll remember, these gases are contributing to the greenhouse effect, which is leading to global temperature rises. So what's driving this increase in GHG reporting, greenhouse gas reporting? So we are seeing some mandatory reporting requirements. Some larger businesses are now required to include their energy use emissions in their annual director's report. I've used the example here of the SECR, Streamlined Energy and Carbon Reporting requirements, which means that obligated companies are required to report on energy consumption and associated greenhouse gas emissions within their financial reporting for Companies House. We are also seeing that pressure is coming from investors in the form of initiatives such as the TCFD, the Task Force on Climate-Related Financial Disclosures, which aim to improve and increase reporting of climate-related financial information and to quantify climate change risk and opportunities. For smaller businesses, the need to report on emissions is largely coming through local authority and national government procurement requirements. So many local authorities will have their own environmental and social value requirements in their procurement processes. And all national government contracts of £5 million or more will need to have a carbon reduction plan in place. And measuring and reporting on emissions is a key part of this. And that's outlined in PPN 0621, Procurement Policy Note 0621. Increasingly, businesses are coming to us for support because their customers are asking them about their carbon emissions and their environmental management commitments. So many of our smaller businesses are from the food and drink sector, where there's a growing concern amongst consumers about the climate impacts that their food, their products are having. And so producers are under increased pressure to report on these emissions. Likewise, larger businesses are also now considering the emissions arising from across their supply chain. And so they're then asking their own suppliers for information about the emissions associated with their products. And then finally, we're seeing how measuring and reporting on your emissions can support your brand identity and is essential if you're going to achieve your net zero commitments. So quick reminder there what we mean by net zero. Net zero is the balance between greenhouse gases that you're generating and those that are being removed from the atmosphere. So to be able to set realistic targets and achieve them, you're going to need to be accurately measuring and reporting on your greenhouse gas emissions. Next slide, please, Steph. So let's just get past some more of the jargon that we use in emissions reporting. In everyday conversation, we tend to refer to our carbon footprint. So this is the total greenhouse gas emissions caused by an organisation or an individual, service, place or product. And it's expressed as carbon dioxide equivalent. And that's written as CO2e. So although it's called a carbon footprint, it actually measures all of the main greenhouse gases and then lumps them together into one unit of measurement, which is CO2e, carbon dioxide equivalent, and that's usually in kilograms or tons. In reporting terms, we also use the phrase greenhouse gas inventory, and this is essentially an accounting term which is used by the Greenhouse Gas Protocol, and this is one of the main methodologies we use for company reporting. But it's just another way of saying carbon footprint. So both terms take into account all greenhouse gases and then they measure the total outputs in carbon dioxide equivalent. Next slide, please, Steph. So let's have a look or a think about where your greenhouse gas emissions are likely to be coming from for your business. So firstly, your premises. So wherever you're working from, you're going to have space heating and probably water heating and lighting, maybe air conditioning, and all these things which you need to run a site. So your gas, heating oil, LPG, and electricity use will all have associated greenhouse gas emissions. Likewise, your electrical equipment used in production or delivery of your services. Then, of course, there's transport, whether this is transport of people or transport of products, it's going to have associated emissions. And traditionally, this has been from petrol or diesel. Then there's your waste. So recycling and incineration generate lower greenhouse gases than landfill, but this will still be contributing to your carbon footprint. And finally there, we've got emissions arising from your value chain. So these will be from products and services that you're buying in, and right through to your own products and services that you're delivering. Next slide, please. So I find this chart a really useful way of visualizing all of these emissions and seeing how they fit into your carbon footprint. It's a well-known image from the Greenhouse Gas Protocol, which, as I mentioned, is one of the methodologies we use for emissions reporting. So if we look at we've got the gases along the top there. But if we start with the blue arrow in the middle, scope 1 direct emissions, this blue arrow represents the fuel burnt in your company-owned vehicles and also at your company facilities. So that's going to be your gas, oil, petrol, diesel, where you're actually burning the fuel yourself. Next, if we move to scope 2 emissions on the left there, the grey arrow, these are indirect emissions, and this is your electricity. So this is where you're buying in the energy rather than burning the fuel yourself. So it's these scope 1 and scope 2 emissions which should form the basis of every carbon footprint and greenhouse gas inventory. And they should always be included within that. So if we move on to the scope 3 emissions, we can see that these are indirect emissions and they fall into 15 different categories, upstream and downstream in the value chain. So upstream, we have categories such as purchase goods and services, capital goods, fuel and energy related activities, transport distribution, waste, business travel, employee commuting and leased assets. And then downstream we have another 7 categories. Again, we have transport and distribution, which is the things that you're not paying for yourself, the transport and distribution you're not paying for, your business isn't paying for. We've also got processing of sold products, use of sold products, end of life of sold products, leased assets, franchises, and then finally investments. So you can see that there are lots of different categories of scope 3 indirect emissions coming from that value chain. And this is quite often where the majority of an organisation's carbon footprint is actually coming from. For smaller businesses that we work with, it might not be appropriate or possible to collect information on all of these scope 3 categories. But what you should do is to start by mapping out which of these categories are relevant for your business. And there will be some that you can start with. So some of them, the easier things will be things like waste, business travel, and employee commuting. And we can obviously help you with all of those things. Next slide, please, Steph. So when you're calculating a carbon footprint, the next step is to think about where you're going to find the necessary data and information. Wherever you can, you need to try and use existing data collection processes. If you can centralize those processes, it'll probably make it easier to manage. And if this can be done regularly, say monthly or quarterly, it's much more manageable than a single annual exercise where you're gathering data for a whole year. And it also means that any systems that you put in place can be sort of checked and improved throughout the year. And this can help prevent gaps where you've got information missing. So if we start with scope 1 and scope 2, the data needs to cover a recent 12-month period, and this can be a calendar year or your own financial year, whatever works best for you, but it should be a recent 12-month period. So for oil and gas, if we're thinking about scope 1, oil, gas, LPG, those sorts of things, they're going to, the data you need for that is going to come from meter readings or delivery invoices, and it's going to be in the units of consumption. So that'll be kilowatt hours, meters cubed, litres, kilograms, those sorts of things. Likewise, fuel consumption in your business vehicles, ideally this would be in litres of fuel. If that's not available, then mileage and vehicle type can also be used. And hopefully you'll be able to get hold of that information from fuel card data, invoices, those sorts of places, maybe servicing records, those sorts of things. And then we've also got scope 2 here, electricity consumption at your premises. So this will always be in kilowatt hours, and it's usually the most straightforward to get hold of through meter reads and supplier bills. There will be situations where you don't have direct control over those bills, maybe where you're charged for electricity through service charges or charged by your landlord, and the consumption is not sub-metered. So in these situations, you can use estimates and assumptions, but wherever you are doing this, you need to make sure that you're transparent about that, and you sort of explain or disclose alongside your carbon footprint which elements have been based on estimates and how these have been achieved. But there are always ways around this. So even if you haven't got accurate data yourself, we can come up with ways of making sure you're including all those, the different scopes. Next slide, please. So scope 3 emissions, it's often trickier to get hold of this sort of information. Obviously, they're indirect emissions, you might have less control over them, but there are ways of getting hold of useful information which can be used to calculate the emissions. For example, employee business travel can usually be recorded through expenses claims, and that would be in miles and hopefully vehicle types. Likewise, employee commuting. So lots of the businesses that we're working with use either expenses forms or staff surveys to capture information on commuting and also working from home, and those sorts of things. In terms of waste, your waste contractor should be able to provide the necessary information around volumes of waste that's being recycled or sent to landfill, and that would be in kilograms or tons. Where you can't get hold of actual data, for example, perhaps something like goods and services that you're buying in or transport and distribution, You can use averages and your spend on particular items to estimate the associated emissions. And as I say, this getting hold of this data can be the trickiest part of the carbon footprinting process, but our advisors will help you to we can sort of handhold you through that process, make sure you know what you need to be collecting, and we can find out how we can get hold of the data we need. And then, of course, once we have the information that I've just mentioned, we would need to calculate the associated greenhouse gas emissions. And we would do this by applying the appropriate carbon conversion factor for the different categories. So that's when our sort of groundwork magic comes in. And next slide, please, Steph. So you've calculated, thanks, that's the one. So you've calculated your carbon footprint. What next? So the next stage is to talk about it to your staff and your stakeholders. First of all, your staff, make sure everyone within the organisation is on board with your commitment to measure and report on emissions, kept up to date with any changes, any progress against any targets. Research shows that environmental sustainability is of increasing importance to employees, so it will probably be of great interest to them to know what their own organisation is doing to reduce their environmental impact. You should also report publicly on your emissions, and you can do this in a sort of informal way through your website or social media, that sort of thing, or you can produce a more formal greenhouse gas report and share that with your stakeholders. Once you know where your emissions are coming from, you can prioritise action to reduce those emissions. So if you look at that carbon footprint, you'll be able to see where most of your emissions are coming from, and this will help you to find ways to reduce this, so looking at quick wins and then longer term investments. Groundwork can support you with this, so we often work with our clients on decarbonisation plans and strategies, and these will be informed by us coming out to visit your site and meet with different teams within your organisation. We can help you to set reduction targets. So this will be again informed by where you want to get to and any actions that you've already identified to reduce emissions. You should make a commitment to measure progress and report on emissions at least annually. Let people know that's what you're doing. And then finally there, you can use the experience of calculating this first baseline carbon footprint to review and refine your reporting process. So looking at where data was unreliable or you couldn't get hold of it, and thinking about how you can improve the ways in which you obtain the necessary information so that you can improve that process for next time round. Next slide, please. So how can we help at Groundwork? Well, I've mentioned lots about greenhouse gas inventories and reporting. As I said, we can calculate that carbon footprint for you. We can put that into a greenhouse gas report that you can share internally, externally, with your suppliers, with clients that you're working with. We can also, if you are reporting already in-house, we can provide external assurance of your carbon reporting. And that can be useful just to make sure that you're confident in what you're sharing about your emissions. And it can give that sort of third-party assurance that you haven't just plucked the figures out of thin air. So we can help you with prioritization of carbon carbon reduction plans, reduction actions, put those into carbon reduction plans and pathways to net zero. We carry out resource efficiency audits and assessments, energy efficiency assessments, and we can use these to put together sort of costed in terms of financial cost and carbon savings, a plan to get your business to net zero if that's where you're looking to get to. And then finally there, carbon literacy training is quite a large part of what we do as well, which is essentially making sure that the people within your team, within your organisation have a good understanding, good level of understanding around climate science, the terms that we use, and how a carbon footprint is calculated, these sorts of things, but also what your organisation is doing and how their position or role within the organisation can support you to reduce your emissions. So I think that's about it from me, Steph, in terms of the presentation. Yeah, we're happy now to take your questions.
Thanks for that, Amy. Really useful. As I said, we're now onto our Q&A feature. So if you could just be so kind to put up, use the raise your hand feature, which is under reactions on the bottom panel. You can press raise hand just so that we can make sure that we don't have too many people speaking over each other. While you get started on that, I've got some questions which have been asked in advance. So perhaps you yourself, Amy or Rex, could help with this, and then I can already see that Stuart and Ollie have both asked, so I'll move on to you next. So the first one is, we're a small company looking into setting net zero target. Is there any guidance on what needs to be included in this target in terms of our emissions?
Yes, there is some guidance. So there are a few sort of schemes, programs running to support businesses to set net zero targets. One of these is the Science Based Targets Initiative, SBTI, and they have some quite useful resources, open access on their website, which explain what you should be including within your net zero targets. The PPN 0621 government procurement guidance also suggests for small businesses or SMEs that they should be including their scope 1 and scope 2 emissions within their reporting and targets, and then 5 other categories of scope 3 emissions. So those are business mileage, employee commuting, waste, and then transport and distribution upstream and downstream. So there is some guidance around, and we can certainly provide information about that afterwards if that's of use.
Right, I'm not sure if Stuart, if your question was the one in the chat or you've got an additional one. Just hand over to you in case there was.
No, it was the one I asked in the chat.
Great stuff. Yeah, so for anyone who hasn't seen, we'll circulate the slides from this presentation to all attendees as well, and I'll include an email address in the chat as well for anybody who's got any queries or questions that come up afterwards. We're happy to answer those. There was also a question by Ollie in the chat that the question is it net zero or is it carbon neutral?
Well, we tend to work to net zero. I said in the presentation, net zero is basically the balance between the emissions that you're generating and those that are being removed from the atmosphere. There are some sort of criteria around what makes a credible net zero target, and the emphasis for net zero really is reducing your emissions down as low as possible, preferably to 90%, and then only offsetting those remaining emissions. Carbon neutral tends to mean that as long as you're calculating that carbon footprint and offsetting the same value of emissions, then you can claim carbon neutrality. So I think there's less emphasis on reduction as opposed to offsetting with carbon neutral. Would you say the same thing, Rex?
Yes, I think so. These are phrases that are bandied around a lot, and I mean, you're very lucky if your business generates no carbon, and the net zero is, as it sounds, you've got a gross emission and then you're offsetting it somewhere. So the key thing is really about reducing your emissions, your carbon emissions first, and that's the big target. But organisations are setting targets of 50% or even higher, as Amy said, to reduce those emissions, and then you're going to end up having to offset at the end in some form or other what's left, if you see what I mean.
Yeah, and I think the Science-Based Targets Initiative says a credible net zero target should look to halve emissions by 2030, reduce emissions by 90% by 2050, allowing that 10% offsetting.
Yes.
Great stuff. There's another question. Could you tell us about the calculation of the carbon footprint tools?
Yes, I mean, basically, it's very simple. To start with, the government publish a set of data every June. It's updated, which has got an emissions in effectively carbon emissions. Carbon dioxide equivalents. And it's a figure for every kilowatt hour of electricity or every litre of fuel, that sort of thing. So the calculations at the end, in theory, are simple. The getting of the data is always the hardest part, but you've got to know where you're putting that data then in order to calculate and get the right figures in the right scopes and dealt with in the right way. So, you know, for example, the government data covers everything from electricity, oil, gas, all sorts of different oils, aviation fuel, and all those sorts of things. And then it goes on to then look at the well to tank emissions for some of these. So for electricity, there's a transport and distribution conversion factor. They're all called conversion factors, by the way. So when you look at your electricity, there's the basic scope 2 conversion factor. So you're 1,000 kilowatt hours times 0.0002 or whatever it is kilograms of CO2e, and then there's also an associated transport and distribution, and for other things there are well to tank charges as well. So it is just basically a calculation timesing one number by another, to put it very crudely, but it can get very complicated. The data the government publish is enormous because there are so many different things in there, and so many different ways of dealing with electricity, for example, right the way through to now they've included home working. So there's some figures for calculating the footprint of a day working at home. It's fairly crude, that sort of thing. Well, one of the things that Amy touched on earlier was about vehicles, and now when you've got a business vehicle, you can either use the litres of diesel you've put in it, or you can use a diesel vehicle of a large size, small size, big, mini, or you can go to average. And if you haven't got the data and you have to use things like the averages, then it gets much more difficult further down the line to say you've improved anything. Because if half your staff get themselves an electric vehicle and you've just been working your footprint on an average vehicle of unknown fuel, it won't get reflected in any changes that you do. So yes, there's a phenomenal amount of data in there, and you've got to get the right one and then do a very simple sum at the end. I think that's the best way I could. You would agree, Amy?
Yeah. I mean, there are some online carbon footprinting tools that you can use, and that's fine. They can be a bit confusing, and you don't always have, you know, the sort of explanation of how that figure has been achieved. So you can't always see, as Rex was saying, has an average been used there? Is it specifically because that was a diesel vehicle traveling 50,000 miles, you know, those sorts of things. So it depends what level of accuracy you're looking for, really. But there are plenty of free online tools that exist that will give you a picture of what your carbon footprint looks like.
Yeah, the key thing I think with those is that they are very much working on averages, aren't they? You just sort of put in some very averaged and loose figures in there. The things on some of them I've seen. We work at that sort of specific detail in order to enable us to show a saving. You know, our own expenses forms now, we put in whether we've got a diesel vehicle, a petrol vehicle, or an EV, so that when we do our mileage, they can charge it the right way, because we're hoping staff will get electric vehicles. Yeah, Amy's the first, I think. But you know, you can't, if you haven't got that level of detail, you can't show the improvement so easily.
Another question here, they're just asking you to expand on what the resource or energy efficiency kind of assessment would entail. What's the kind of process, and what would somebody get at the end of that as well?
Yeah. Well, Amy and I have been working for 6 years on a project going around to businesses to do with grants, doing exactly that. And we've carried on doing all sorts of premises. Recently, I've been doing leisure centres and swimming pools and that sort of thing as well. And basically what that entails is going into the building and having a look at what they've got there. So it's all the electric consumption equipment, gas, oil, you know, LPG in forklifts, that sort of thing, and then doing an assessment of that. The first step is to put together a footprint. You know, what is the footprint of that business, and then looking at what they can do to improve that. And I mean, just recently I've been looking at insulation in buildings. You know, we can work out calculations to say, look, the heat loss of your building is this through the roof, the walls, the windows, the floor. And if you improve that insulation, it will save this tons of CO2e per year. So we can do all those sorts of calculations, and that insulation is just one. But we can do calculations on equipment, and even, like I say, swimming pools, looking at the motors, the pumps, the air handling equipment. Heat losses from water and all this sort of thing. You know, we can do calculations for a lot of different things and show you what you can potentially save in emissions. And if we've got cost things, then we can sort of illustrate how much it might save you in costs, and obviously then therefore the payback. So it can be very wide. Looked at over years.
We usually focus mainly on energy because that's where emissions tend to be coming from, but we also include water and waste in those as well.
Thank you both. Any more questions? While I give you just a few more minutes, I've just quickly created a quick poll about greenhouse gas reporting that I thought probably should have asked at the start to give some framing to this, but I'll launch it. If you have a chance to answer, it'd just be really useful for both Amy and Rex and myself to know, obviously try and respond about that. But I have just seen another question come through from James. So they are a waste management company, dispose of large amounts of waste and create a lot of carbon. How do they realistically plan to reduce this when it's their core business?
Funnily enough, I have looked at the refuse fleet for a local authority, and obviously for a local authority, the emissions from the diesel is enormous. I mean, it's virtually half of their emissions. Yes, there's been a lot of talk over the last few years, as I'm sure is aware, of electric refuse vehicles, but they are limited. The offset is that you put in great big batteries and you've got less waste you can carry through volume and weight. So I believe that the authority I've been working with, I believe they're looking at hydrogen as their next stage, as being a bit more feasible. Although there were some issues with the weight of the tank on that as well. With refuse vehicles, they don't have as a regular route, as I understand it, as I'd have expected. And if you don't quite know what you're picking up, so if you fill up before you've finished your route, you've got to go back and dump it. And if you've got a limited mileage because of electric batteries, then you've got a problem getting back out again. You can't just refuel immediately. Whereas hydrogen could be a better option in the short term, because you can just fill it back up again.
I suppose on the other side of that question, around the actual method of disposal, I suppose, you know, moving away from landfill is going to save, reduce emissions. So if you can come up with more environmentally sound or lower emissions generating ways to dispose of that waste, then that's obviously going to have an impact on those scope 3 emissions for your business. But it's very tricky, yeah, if that's your core business, you're going to have.
Yeah, so I think a lot of waste businesses are doing lots of recycling, aren't they now? And I think most of the East Anglia residual waste that we used to call landfill now goes to incineration, which is controversial in its own right. If you drive by Wisbeach, there's lots of signs of people not wanting a new incinerator there, but so it's a tricky one. But yeah, it's about getting as much of it out of landfill as possible. If you can get energy from waste by incinerating it, then as long as it's done carefully and well, then that could be a way forward.
Any more questions? I have popped an email address in the chat, so if you haven't managed to navigate the chat feature or you think of something in half an hour's time, feel free to contact us. If there's no other questions, I guess we can finish up early today. Thank you everybody for coming, especially thank you to Amy for the presentation and Rex for your feedback and answers. We will circulate the slides and a link to the recording as well. Hopefully you guys will, if you need any support, you know where we are. We'd love to hopefully work with you in the future. Thanks so much.